major part of our plan has now been completed, and that was getting the house valued. Our plan being selling the house, taking my pension, moving to France. We needed 100,000 equity in our property really for our plans to work the way I've worked everything out, all my spreadsheets, all my budgeting, everything else. We had a really nice guy came around the house today to value the house, give us some options of how we might sell the house, how soon it might sell, just some ideas. And it looks like we should be able to realise at least 100,000 equity, which should be absolutely is just a massive weight off my mind, totally. You know, you get a feel for things in your local area, you can see what properties are selling, and then you try and have a nose around as to what their properties are like compared to yours and all this sort of thing. But until you actually get someone who really knows what they're doing, and this guy really knew his stuff, he was extremely thorough. So we'll definitely be going with them next year, and they said they'll come around again and just sort of appraise the house, but hopefully it will be the same. My Caravan cover just blew off completely, and because I have to unzip it to get in, and the wind is coming in at a pace of knots over here. It just blew the whole cover off. So I've just been out in the street wrestling with that, and then have to come back in. I've had to crawl through the door and have the thing partially zipped up. It's a bit embarrassing. People are thinking, what's he doing in his Caravan? That's so important. Running this channel, this is very important. So yes, thankfully we will be in a position where hopefully all the numbers will still add up according to our figures anyway. Yeah, with that knowledge, we can now go through and do some changes to the house, which won't cost a fortune at all. A lot of those changes we'll be able to do before next March. Some of them we might need some extra money for, which I can do with my pension access, and we can get those done fairly quickly as well once we've got the money. So that's really, really good. And that won't eat into my pension massively at all. All the more reason to get a tow vehicle and tow the Caravan, you know, which we've already got. So rather than spending out on the motorhome, as I discussed before. So yeah, that's fantastic news. Now all I've got to do is get to work on building my pension pot. So what I also wanted to cover today, briefly, if I've got time, is how I'm protecting my pension. Now, it made me realise that, you know, this time between now and next March is approaching. It's going very, very quickly. We need to get a few things in place. So I was looking at my pension and I was thinking, okay, where's it invested? How safe is it? So there's something I've been looking into, and it's called a sequence of returns risk. And basically what that is how you're going to mitigate against stock markets crashing. Because although generally, you know, any stock market crash or any sort of big correction in the stock markets, you know, it might lose you a load of money, but if you leave it invested over the years, it will gradually bring itself back up and usually beyond what it was originally. I haven't got the time to do that. I really haven't. And what the problem could be is if next year I'm in a position where I'm cashing in investments to live on as drawdown, you know, each year. And if there was a massive drop, then I'd be selling low and not selling high. And that's a real concern. So basically what I've done is I've moved quite a bit of my money into some gilts. There's something called the Royal London something or other. Can't remember what it is. It's some kind of bond or gilt. And basically the capital won't move at all. It won't gain, it won't lose generally. It will just stay steady, stay the same. But it currently pays 5% interest, if you like. Well, yeah, I think it's interest. Yeah, it's interest. And so basically they're like a government bond, so they're pretty secure. And it pays 5% interest, and that's paid monthly. And it pays monthly back as cash. So that will start to form a bit of an income for me in retirement. So rather than drawing down on cashing in investments, I can leave those running long term, and then I can have some other money that's like giving me an income that I can then cash. I can cash it in very, very quickly. There's no risk to the capitals. There's no risk of buying low, selling, of buying high, selling low, and it also gives an income as well, which I should be able to draw on because that'll gradually build up. So it just gives me some more protection for my money. So obviously you've seen on previous videos my breakdown in my SIP. A lot of it's kind of geared towards American markets like the S&P 500. Some of it's in global markets, some of it's in tech, some of it's in British like the FTSE and UK investments, and also I've got the City of London investment or whatever that is. That pays a dividend as well. It's about 4% currently, and that pays dividend quarterly, I believe. So again, that's a bit of an income. It's still as risky. People have been talking about ETFs, or exchange traded funds, which is a derivative, trading derivative, if you like, and they pay very good. They pay sort of 11 to 14%, but much higher risk. So it's all right paying 11 to 14% if you've got only 50% of your money invested in them left after a big crash. So too risky for me at this stage. I may look at where some of my US index funds are, and maybe have a look at sort of divvying those up into some ETFs, £5 here, £5 there, but nothing major. The bulk of the money needs to be in something more secure, giving me an income, and is not going to drop long term. So hopefully I'll put some details of those on the screen, and you'll see where that's invested. So yeah, not investment advice at all. It's just something that I've been looking at. I've been doing lots of research online. I've been looking into, I've got a lot of help from AI with this as well, and also massive loads of info on HL on their website. Looking into previous returns, having a look at ring fencing strategies and all that sort of stuff. I'm not an expert, far from it. I'm just a I'm just a guy on the street trying to invest his money in the best way possible, and that's what I'm doing. It's the safest option for me right now, I think. Okay, so it's a little quick update really on how I'm protecting the money going forward, because as I'm very aware, the time is going really fast, and we're still not entirely sure exactly what we're going to do, but what we certainly are going to do once we get to property sold, money in the bank, plus then the SIP, access to the SIP. You've got my cash, my tax-free cash, and we've got the money there to buy the tow vehicle. We get the tow vehicle, we're going to go off in the caravan, whether it's France or the UK, and we're just going to spend a month planning and updating you guys, obviously, with and then just sit down and think about what we're going to do, and start working it out. Do some more recce's in France, because that's the ultimate goal. But if it doesn't work out, we've got to look at another option. We really have. And it might end up us buying a plot of land and showing that we can live off grid in Wales on an agricultural piece of land. It might end up us doing that, but so be it. But ideally, we want to move to France, so that's what we'll be doing. Oh, just to cover another question about the tax implications. Looked into this. Tax implications of being in France. If you're there for more than 183 days of the year, which of course if you apply for a year's visa, they'll probably assume that you're going to be, so you'll end up being tax resident. And what they want is they want all your world income from wherever it comes. So even if that was YouTube income, for instance, which is paid by America, they want the lot. They want it taxed. So as long as my drawdown and any earnings are lower than my tax threshold, which is slightly less in euros than it is in pounds in France, slightly less in France than it is in UK, then we'll be fine. We won't actually pay any tax. And there's a social tax, which I believe if you're paying tax, then you have to pay that as well. I'm not sure whether you have to pay that anyway, and that's about 9%. So there could be some tax implications. So I'm going to have to try and factor that in on my Ready Reckoner spreadsheets, just in case that does affect us. But I don't think it's as bad as when I initially looked at it and thought, oh my God, that's it. France is blown out, because there's also the treaty between UK and France, so you don't pay tax twice, luckily. But if I had to transfer all my pension details over to them and everything else, then not a problem. I think it actually works out okay. It's only if you're a really high earner, then you could be taxed almost half of it. There's no really getting away with that. But we're not high earners, far from it, and I won't be drawing down massive income at all. So that should be good. And I'll have already taken my tax-free lump sum here, because apparently you can't do that when you're in France. But I'll have done that already, so they won't be able to get their mitts on that. So yeah, that's pretty much all the updates so far. Also, we've hit 6,000 subscribers, so this channel is obviously resonating with some people. Thank you very much for anyone who's just subscribed recently. We've just done 625 subscribers in the last week, so nearly 100 a day. It's amazing. So there's obviously plenty of people out there who are thinking of living life on their own terms, and good. Yeah, too right. And I look forward to updating you of our progress, good or bad. Any updates, obviously, we'll be keeping you abreast of what's going on. That's enough from me. You've had 2 videos almost back to back now, so I'll leave you with that, and thank you very much for watching. I'll see you soon.